Good morning and welcome to your market report for this Monday, June 11th, 2018. Welcome to the show, guys. Now listen, the first thing we're going to do is we're going to open the charts right here, and we're going to get right on to the silver price first thing. And what do we see? The silver price is trying, really trying to move back up into that range I was talking about last week. I said that silver was heading to 1720. Into the upper range. That's what I call the upper range, 1720, and the 1660 is the lower range, around 1650, 1660. I said silver is trying to move into that upper range, and it is today. It's really trying hard to make it up to 1720, and it's at 1686 right now, and it's moving upwards, slowly but surely, and it's trying to get into that upper range of 1720, just like I said last week. Now, let's go to Bitstamp, Bitcoin. Bitcoin is doing what I said that it was due to. It's trying to make that bottom, another bottom. I can see it making 3 bottoms at least before it starts to actually move upwards again in price. And these bottoms, they could be a good time, a very good time to accumulate. Now, this is not financial advice, but I can just tell you what I'm doing. I'm trying to do what's called cost averaging. I'm buy a little bit when I see a bottom like right now, and then that's what I'm doing, and then save my money because the next bottom might even be lower. And so then I cost average while Bitcoin is in a bear market. Now, you don't want to buy Bitcoin when it's in a bull market, like when it was in this lead up and this run up to $19,666. That's not the time to buy Bitcoin. The time to buy Bitcoin is when you're in the bear market. And what you do is you buy a little bit to a time, all the way down to the bottom. That way you don't get hurt too much. Because if you bought all of it right now, boom, spend all your money in it right now. What would happen is what if it happens if it drops $2,000? You're going to be crying, right? So what you do is buy a little bit. Keep buying a little bit as it goes down lower and lower, and you cost average all the way down to the bottom. And then when it hits bottom, it starts to work its way back up again. And then you can ride out the bull market in HODL all the way to the top. And you're a happy camper. So that's my plan anyway. I'm not going to let go of this stuff. I'm HODL in it, but I'm trying to cost average as I buy in just a little bit to a time. And today, I'm thinking about maybe picking up, I don't know, maybe a half a Litecoin or a Litecoin or something. I like Litecoin, but I'm thinking about maybe transferring it into EOS. Because EOS, take a look at this, guys. Take a look at this. Cryptocurrency market capitalizations. Most of these coins are down a little bit today. And but yeah, look at EOS. Look how far down it is today. It's 16.37% down. That is looking good. $11.08, you know. I'm thinking that's looking like something I want, a little bit of EOS right there. Take a look at this. We got Bitcoin dominance of 39.1%. That's quite high. And market capitalization of 296 billion. So we're under the 300 billion market capitalization right now. That's really something. Bitcoin's really coming down in this bull market, you know. This is the time to slowly accumulate your coins all the way down to the bottom, and then try to find that bottom and try to make your major accumulation there at the real bottom when it finally gets down to the bottom. But do not sit there and say, hey, you know what? I'm going to wait for that bottom before I buy any. Because if you do that, then what if it does turn around and head back into a bull market? And then you get caught with your pants down because you haven't bought any. You know? What about that? Anyway, Dow Jones Industrial Average. Now, what we're looking at is it's up 38% on the day. No, that says as close. Hold on. It should be on. It should be going now. 10:39. Yeah, it should be. Market okay. Market open up 38.75%. And I'll tell you what I think right now about the market is. You see how this is crowning off a little bit? Oh, it's curling off this way a little bit. I think it's reached the top just like at this top down here. It reached the top for 25,709. I think it's reaching resistance right here, and I think the market is just about up as high as it's going to go in the short term right today. I think that what we're looking at is we might be looking at. I don't think the market's going to go below 23 in the short term either. But I don't think it's going to go up much higher than it is now, not too much higher than it is now, because the bond market is going to start heating up again very soon. Now, if we take a look at oil right now, at $65.14, we're down 60 cents on the day, or almost 1% down on the day. So this little bear market in oil that we've hit ever since we hit this peak of 72.48 on sweet light crude, which is primarily what's coming out of. It's a little bit cheaper than the sour oil, the heavy oil, like Venezuelan oil. I'm going to tell you, Venezuelan oil is really getting cut back. They're supposed to be producing 1.4 million barrels a day, but they're only producing, I think, like 600,000 right now, and dropping. That's part of your sour, your thick, heavy oil that they need to mix with this sweet light crude. So this could represent a problem, because Venezuela, they're one of your biggest sources on earth of that heavy, thick oil that you need to mix with sweet light crude. At any rate, a lot of the oil coming out of West Texas is this sweet light stuff, So anyway, we're looking at quite a little bit of a drop in price here today, and you're going to start seeing more and more drops at the pump. Coming up now. I told you about this about a week or two ago. I said, hey, you know what? We're going to see more of these drops of price at the pump. And you've probably seen a few substantial drops of price at the pump. And there's maybe more coming, because this might not be quite over yet. I can see it going down to $2 or $3 more yet before it finally stems itself off. And then the oil price stabilizes again. I see it stabilizing in around this price right here. I can see it stabilizing in the short term. Long term, looking out 2 years from now, looking at $200 oil. I know that's a mouthful, and you guys, a lot of you are shaking your head and saying, no, it'll never get to $200. You just watch. Look out a couple years ahead, 2 or 3 years from now. So don't go out there buying that SUV or that big Hummer right now, because you'll be looking how to sell it. Because the oil price goes up to that. And the government's adding all these taxes into the oil too. These hidden taxes and stuff, especially in California. Oh my gosh, they're just stripping people in California for taxes. Oh my gosh, on the oil. And here in Canada too. It's just ridiculous. And every time the oil price drops a little bit, they keep the price at the pump the same price by adding more taxes in. And then when the price goes up, they keep the taxes in. So then you have to pay them, and it's just sinful, and the reason why they're getting away with all of this is because people are got their heads in their cell phones now, and they're not paying any attention to what the government's doing, and the government is stripping you blind. It's just like a guy who's paying attention to whatever he's doing, and the other guy's picking his pocket because he's not paying attention. The other guy's got his hand in his pocket, and they got their hand in our pocket, and we need to stop this, because this is going to get worse and worse. If somebody doesn't do something about it, and actually, these guys are criminals. They're organized criminals, and they're organized and we're not, and they're taking advantage of us. So now let's take a look at bonds and rates today. 2.964% on the U.S. 10-year. She's up. The bonds are moving up a little bit today, but I don't see them running away. I don't see the U.S. 10-year going too much over 3% right now until the end of this month. You say, what's going to happen at the end of this month? Well, the Fed is jacking it up $10 billion more on top of the $30 billion they already got. They're going to $40 billion a month in these bond reverse quantitative easing that they're doing. And so that's going to happen is after the first of next month, we're going to see the bonds start to take off again. By the 15th of next month, I'm expecting the U.S. 10-year to be substantially higher, probably 3.15 or something like that, and heading towards 3.25. Probably, I'm not exactly sure when it's going to get up to 3.25 because these buyers keep coming in. These buyers keep coming in. We're going to run out of these buyers because we got, on one side of the trade, we got $4.5 trillion worth of bonds to sell. And these buyers, how deep are their pockets? I guarantee you they're not $4.5 trillion deep in their pockets. We're going to run out of buyers in the end. And then we're going to see the bond yields explode when that happens. That's when the system's actually going to start to fall to pieces at that point. And it's not that far away, guys. I hope you guys are getting ready for this. Now, 93.50% on the dollar index. That means she's down a little bit. She was riding up around 94. In the short term, my price that I'm looking at is 91 on the U.S. dollar index. And I've been looking for that for a while. And we're starting to creep down toward it. Again, toward the 91 mark. That's the mark I'm looking for. So anyway, listen, this has been your Watch on the Markets for today. Thank you guys for tuning in. I really appreciate you guys watching my show. And we'll catch you tomorrow. Bye-bye.